Welcome back, everybody. Thanks for coming. Sorry about the delay, but we are here with some two very special guests, Hexastani Dylan and, of course, Buck Fiat. These are some of the guys behind the famous Fiat and Fatty ecosystem that they're building out. It's essentially, borrowing, lending, and leverage now. And they've got some pretty big updates, which they revealed in a Twitter Spaces. If you guys missed that Twitter Spaces, I'll just give you the short and sweet version. They're forking GMX onto PulseChain and I think making a DeFi leverage trading platform. So you can now wreck yourself up and down in many different ways with whatever coin has sufficient liquidity. And, people look at this as a necessary evil, right? Like it's something that I will never do myself. I'll never be margin trading. I'll never tell anybody else to do it. But, people do it anyway, right? So in my mind, this is kind of like buying cigarette stocks or something like that. Like if you want to buy the token, Phamous or Fiat token, you basically get to be the casino. You get to be the house and you get a big percentage of all the trading fees because there's no middleman and all this stuff. Like we collectively, whoever wants to hold the tokens and stake them are the effective middlemen. So that's Fiat and Phamous in a nutshell. But guys, let's have Buck introduce himself and see if I butchered that description.
Yeah, so good day, everybody. So I guess I'd start off by saying it's not as bad as cigarettes or a casino. These are actually really useful tools that are necessary, but they oftentimes get abused by people who don't know what they're doing. They oftentimes are promoted by platforms that are designed in rather unfair ways. But fundamentally, risk management of a portfolio is a very, very important tool. And what risk management entails is being able to cover your positions, to short your positions, to hedge your positions, and to really manage your portfolio in a total context. So looking at every different position you have, whether it's Ethereum, HEX, or Bitcoin, or your stocks, everything, right? So what professional money managers all around the world do every day is they use tools like this, which is why they're legal, right? They're not necessarily some evil thing. I think a casino is inherently kind of a nasty thing, but this is not inherently a nasty thing. So I guess it's important to kind of understand the context of that as a starting point. You don't have a serious currency, you don't have a serious ecosystem until you have derivatives and tools that allow you to manage your risk. That's why getting CME futures for Bitcoin in 2017 was a really big deal as a stepping stone for crypto. And as people in the Richard Heart ecosystem, we don't really have the ability to manage our portfolios properly from a risk standpoint without these tools. So I would maybe push back a little bit on that, but there definitely can be a side to this that can be quite nasty. And some websites, eToro, these things, they go and they promote these things on Facebook, try to get teenagers to leverage trade. And I'll never be that guy doing that or encouraging that sort of thing. But having said that, I do believe there is a necessary evil component to this as well, in as far as these sort of tools will be created for PulseChain. And more likely than not, there'll be CeFi tools. And more likely than not, those people will become the largest holders of the token or some of the largest token holders. So I think this is a better alternative where rather than having somebody like SBF or CZ holding all your, being, your second largest holder, after the OA, that this gets dispersed around to the community members. So, yeah, that's a bit of me on my soapbox.
That's a good point. I mean, I'm glad that you did kind of that argument, because that's what I was going to ask you next is, we in the HEX community, we like to talk about margin trading as a bad thing. And that's because I think the way most people use it is not as it's intended to be used. I mean, you got brand new, and in crypto, it's even worse. You got, 14-year-old kids taking out 150x like leverage wherever they can on BitMEX, Deribit. They'll take however much they can get. And what that means, guys, is if you take out 100x leverage on a position, you're putting up collateral, you're putting up, let's say, 10,000 HEX, and you're getting 1 million HEX for that, right? You're getting 100 times, what your actual collateral is. But that means that you also are that much more vulnerable to volatility. So if the price goes against your position, let's say you have a long and the price goes against you even like 1% and you're 100x leveraged long, you get liquidated because you took on so much risk. The system forces you to sell your collateral to cover that position that's now at a loss because before it gets too out of control. And this is all automated on these centralized companies today. This is all automated. But now what we have is essentially a decentralized version of that. So, it's a bit safer in the sense that, there's no Sam Bankman-Fried pulling all the strings, right? Really simply, it's just smart contract code, right? So my question in the title was, is the DeFi version of margin trading any better? And it seems like just by virtue of being decentralized, the answer is obviously yeah. It's better in the terms of it's decentralized. You don't have to rely on corrupt middlemen, like CZ. Not your keys, not your coins. We beat that dead horse all the time. But with DeFi though, with this, you're forking GMX, right? So my next question, I guess, is what is the right responsible way that you see? Explain hedging your positions and explain the non-degen version of using something like Phamous or fiat the right way.
Yeah, so this is a really good question. People that are going to use this and get liquidated should almost be expecting to get liquidated when they put on a position. You do similar bets all the time with insurance. You buy life insurance expecting not to use it, hoping not to use it, right? So when you're using derivatives, they're usually there as a way to sort of hedge a risk that you probably already have inherently in your portfolio. So let's say you're long HEX. You have 15-year stakes or you have 10-year stakes, and it's July 2021, and HEX price is heading towards 50 cents. And you're making new plans for life, and what you want to do. You want to quit your job and move on to a new career. You want to get a house, maybe have some more kids, all right? But if HEX price went down to 2.8 cents, that would actually really hurt from 50, right? So if you could buy insurance at that point in time, right, for the unlikely event that HEX goes from 50 cents down to 2.8 cents, wouldn't you have liked to have bought insurance for that at that point in time?
Insurance,
I know I sure would have.
Yeah, that makes a lot more sense to people, I think, too, because you're just taking out. What he means is basically you're doing the opposite. If you're a bull, you'll take out a short to hedge that position, right? Because in case the price goes against you, you still get some money out of it, and vice versa.
Exactly. So let's say you had $1 million worth of HEX, and it's August now, 2021, and HEX price is at 50 cents. You could basically risk with, let's say, 10x leverage, $100,000, right, of collateral to hedge that position, right? And maybe you get liquidated, right, because HEX goes up some more, right? But maybe catastrophe happens, right? And having that hedge there is a very important thing. Can really soften that blow. So that's just a kind of a simple example of how you might hedge, and why you might hedge. So that fundamentally is a very, very useful tool to have. But there's a million different ways to use these sorts of things. If let's say you're a whale and you're trying to buy into HEX, right? You can just hit market buy on Uniswap, but you're going to eat a lot of slippage. So maybe you put a buy order first on Phamous.io, and then your purchase on Uniswap will start to push the price up, right? So that'll basically offset some of your slippage, right? There's all sorts of fun things that you can do that are interesting from a financial engineering perspective. Now, some of this is over the head of average people, which is fine. If these tools aren't things that you're comfortable with, that's okay. You don't have to like them. You can do other things with this platform, such as just be a person that collects fees on the platform, and there you're just taking a bet that the platform does a lot of volume, right? And what's really important about this fork is that it's fair in the sense that you can take any side of the bet. When you go to Binance, you don't get to take CZ's equity. You don't get to take Sam Bankman-Fried's equity, right? So those guys get really rich, right? Whereas with with GMX and what we're doing with Phamous, you have the ability to basically be the house, either by staking the Fame token or by providing liquidity on the Phamous token, where effectively providing liquidity on PHLP, where effectively you are betting against the traders, right? So you get to take any one of those 4 bets. You can be long, you can be short, you can bet against the traders, or you can just bet on the house, earning a lot of fees. And the choice is yours. You pick the risk that you want to have and the combination of risk. So, you know, at a given point in time, I'm probably pretty happy betting 3 out of 4 of those, right?
Yeah.
On average.
Well, I think it's important too to recognize that when we say some people might not care about this, I think people should care about this to a degree, because they should learn about how to do it for themselves. I mean, it might sound complicated, but if we're able to explain it to you guys in a simple enough way, it could be a really great tool in your arsenal. You know, I used to play around on BitMEX and Deribit, and I had no idea what I was doing. But if I had, you know, I could take out these insurance positions and also do what you're saying, which is, so guys, on Phamous.io, there's 2 different tokens you could do. You could really simply buy the token that lets you share the revenue from the trading fees, or you could buy liquidity provider tokens. And the only way to get these PHLP liquidity providing tokens is to actually put up liquidity, which is essentially taking the other side. So if somebody wants to borrow, you're offering your liquidity up to borrow from, and then you get also paid in fees, borrowing fees from the borrower into you if you have that PHLP.
Yeah, PHLP, yeah.
So there's 2 different ways you can play this here as a non-trader too, because there's risk involved in the liquidity providing to a degree. There's not much risk in sharing revenue, in my opinion. And these are pretty good options, but also, yeah, look at this as maybe an insurance policy. And if you want to set some limits for yourself and say, okay, well, if PulseChain, like I think it's going to do 1,000x return, let's be conservative and say 100x return, right, over like 2 years. And once it starts getting close to there, and once the market starts looking a little toppy, you can say, well, I don't know when the top is going to be, but if I take out a responsible, 1 to 2x leverage short, not 100x, but like simply 1x, right? That would, if market starts to go down, you'd be able to cash out some of that short position and make up for that loss that you didn't get to sell the top, because nobody does sell the exact top. Let's be honest here. So yeah, that's something I would have liked to have. And I know you guys are forking GMX, so I want to ask you guys, I looked at the price performance of GMX and it's not bad, but it was also born I think it launched in September of 21, which is almost right at the top of the bull market. So the fact that GMX isn't really down at all, like it's sloshed around from like, I could pull up the chart if you guys want of GMX, if you guys want to get a little bit of a sense of how Phamous might work. But
yeah,
sure.
Let's talk about it.
Yeah. Well, all I want to say is when I was looking at that, kind of doing my analysis, you have to realize GMX launched at the top of the market. So the fact that it's not down 90%, it's pretty impressive. But obviously it's not going to be up 100x because it's relatively new. It's newer than Aave. Yeah. So I have a little more conviction in something like Aave that's been around for 5 years. GMX is new. Can you guys tell me, like, does GMX have a dual token system as well, or is it just GMX over there?
Yep. So they have a GMX token, which is the equivalent of Fame. They do a GLP token, which is the equivalent of PHLP. It's a good question regarding the performance of it. If you look at it year to date, it's up around 70%, right? So yeah, it did kind of launch at the top there, but it's pretty much the only token you're going to find practically of that's not a meme coin, shit coin that's up 70%. It's actually an incredible growth story. This year I think HEX is down almost 70% over the same time period, to give you guys a handle on that. So yeah, it's been
here. I mean, it's up since inception. It's up like 4x from $15 to almost $50. So it
Yeah.
seems to be performing.
And then the other important nuance to take into account there that's not represented in that price, and this is how GMX is very different, and how Fame is going to be very different than probably every other token that most people own, is that this token has paid out approximately $120 million US in fees to the GMX and GLP stakers and providers, right? So it's the platform's done $120 million US in fees, and that's backward looking, right? So that's not represented in the price. So you have to kind of add that back to the performance of the token to actually do this justice.
So all the fees are getting paid out in Ethereum, or
the range of different currencies.
It's on Arbitrum, so it's yeah, but and AVAX. So it's about 100 million on Arbitrum and 20 million on AVAX. So it's quite a interesting thing. So when you look at the price of GMX token, you're actually seeing the market's expectation of what its future fees are going to be paying you, because all those fees that have already been paid out don't really matter to the price. So it behaves a bit more like more like a traditional stock or something, where it has prior earnings, which are an indicator of what it's done, but the price is more representative of what the future is there. And it's interesting. So it's worth about $500 million now at the bottom of the bear market. And that's an amazing growth story. It's an amazing trajectory
there's been a lot of
for something like this to have.
A lot of people you talk to in the Ethereum DeFi space, GMX is kind of a big deal right now. Like, there's a lot of attention around it. I can pull up the platform too. I'll show you guys what it kind of looks like. So, a decentralized perpetual exchange. It's BitMEX without a middleman. The more I hear about it, the more I like it. And it's like, you got the price of the coin, right? But the price of the coin could be zero, and you would still be collecting fees.
That's
right?
true.
The coin doesn't even need to have a price to give this token value.
It has a cash flow, so inherently it has a value.
But because it has a cash flow, the token does have value, which is why it's up 70% this year, in a year where nothing is up 70%. Like, if you look at the rest of markets, emerging market debt's down 30%, government bonds are down 12%. Stocks are down, depends on what index you look, but let's say 20%. Everything's down this year. The only thing that's up this year is the US dollar and GMX. This thing's been just an absolute darling, and I've owned it probably since February. So it's something that I've been very happy with as a position. And we started working on forking this probably in June or July, probably. And I've had to keep this a secret from Dylan. I think I told Dylan about this about 2 weeks ago.
Yeah.
That's about the same thing you reached out to me then, I guess.
Yeah, pretty much. Yeah. Well, because like this thing is such a great protocol, and I knew that if people saw it or knew what it was, I'd have a million copycats. And I wasn't ready to show it to the community yet. I was hoping to get a V3 from Richard and just sort of snap launch it, but that didn't happen. So in any case, at some point, Arthur Hayes, who you guys probably read some of his stuff, he's one of the BitMEX founders. He did some time in prison, I think, for some of his actions there, but he's been buying this token a lot. So there's some pretty heavy hitters in getting involved in this thing. And yeah, it's an amazing platform, doing very, very well over there. And yeah, I don't think they're gonna, similar to Aave, I don't think they're gonna probably have a high priority to get over to PulseChain anytime soon. So yeah, that's why we're building this.
Yeah, I know. It's like it'd be nice if a lot of the developers from Ethereum just flipped their network switch and all pointed their really cool apps to PulseChain. But I I mean, developers have pride to a degree, but when they've also spent their whole life's work in one ecosystem, it's really hard to convince them to take on all that friction of switching over to a new, quote unquote, untested network. Now we know, obviously, PulseChain is going to be safe. It's going to be a fork of Ethereum 2.0, minimum attack surface because minimum stuff being changed from ETH2. But a lot of people, they just see new network and they're skeptical and they don't want to just launch everything. So I'm glad people like you guys are identifying the really good cream of the crop type of apps and just copy pasting them more or less. I know it's not that simple, but onto the PulseChain network because we need PulseChain to filter out only the good stuff, quality over quantity. But I'm seeing here, so you said that these things are all settled on Arbitrum and Avalanche. I think Arbitrum, isn't that some kind of ZK rollup technology? Avalanche is also a much faster blockchain. Are you going to foresee running into issues with putting this on PulseChain? Because Avalanche and Arbitrum seem quite different. Maybe I'm wrong. I know Avalanche is an EVM chain. Arbitrum I don't know much about other than I thought it was layer 2, but yeah, and just how are you going to make the switch over from these two networks, which are very different than ETH 2.0?
They're similar. They're all EVM.
Okay, so it's all just a smart contract in the same language.
Yeah. I mean, you can already see it working on PulseChain testnet, right? So it's there. Testnet.phamous.io. It's working. It's been up for the public to view for the last two weeks or so. Yeah, there's no issues. There's no issues there. Same wallets. The process is the same. We also have made some improvements, just like we did with fiat as well. We've altered the liquidity token a little bit. I won't go into the details there because it gets quite technical beyond my ability and scope for this. But yeah, what was I going to say about that? So with the developers coming over to PulseChain, it's not as easy as flipping the switch, sadly. And I think a lot of people don't understand that. Some things, like HEX and Hedron, they just get copied over, right? But anything that has kind of additional complexity of oracles or liquidations, these sorts of things, that doesn't just get flipped over easily. And then I guess the other thing we probably need to be realistic about is that protocols like Aave and GMX, they have huge brands, right? And Aave especially has an enormous brand. And what they care about most is not being perceived as a risk, right? And inherently, they're going to look at PulseChain as a risk, right? Fundamentally because of the OA, right? So that's something that's going to take a very long time, I think, for those guys to get comfortable with. Like I think it will take years.
Oh yeah,
so that's one reason.
Yeah, exactly.
Yeah,
they still don't have support for HEX, so yep.
So I'm of the opinion that we're unlikely to attract those top tier developers right away for that reason. What you could see is some of them will come under different branding or something like that, but you wouldn't want to risk the Aave branding or the GMX branding if you're these guys, because you haven't taken that leap of faith yet on the OA, right?
Yeah,
that totally makes sense too. I mean, luckily all of us just being in the know, kind of, we can just beat them to their own game essentially, and why not? It's open, it's openly viewable code, and you're going to make minimal changes. I'm assuming even some improvements, right? So you get to iterate on it one more time and see what do you not like about GMX that you wish was different.
Correct.
Actually, but you can't. I don't want you to reveal your secret sauce or anything, but it's good to know that you've got some updates in the works too.
Yeah, well, just to give you an example that I think works for GMX as well, with fiat, which is our fork of Aave, we anticipated the risk of having a really large whale manipulate price, and we put in things that limit their ability to deposit in size and things like that, and we put that into our new code about 2 months back. And no one really cared about it. But then about a week ago, we had the curve attack on Aave v2, which was exactly this. So we had we had basically foreseen this problem and fixed it for our stuff, and Aave V2 doesn't even have it.
That's awesome.
Spenny's question's a good one. Is there potential for heavy manipulation by whales if derivative markets become too large? So with this protocol, no. With the Phamous protocol is a price taker. So we take price from the market and use an oracle. So we don't have any impact on the market. Theoretically, fiat, which actually moves spot around, will move the market around as people borrow and leverage. But the main thing that's going to be doing that, I imagine, is going to be the activity on PulseX. But derivatives are really much maligned. Every once in a while you hear about some guy who's blown up because he's mismanaged his derivative book. But if you actually realize that the entire market is run by derivatives, and that's how professional money managers move their exposures around every day. It's very expensive to move spot around. So almost everything gets done using derivatives. So when we need to, shave a little bit off or add a little bit, we're usually doing it with derivatives in reality. And it's something that people that do this every day, which is what we do, are very, very comfortable with and have systems for it and all this stuff. But yeah, you should like derivatives. Don't. I know everybody saw The Big Short. It's a good movie. I like Margot Robbie as well. But it's just a movie. Just because one derivative was designed poorly doesn't mean that you want to give up on derivatives. It's a classic example of a really dumb mistake that we make when something bad happens. We always do this. Oh, we should ban all those things.
Yeah, I know. It's it's almost just like the tornado cash guys, right? You get one little transaction from North Korea, and then they just shut the whole thing down. So, but yeah,
that makes me sad. That makes me sad indeed. Yep.
Another point I wanted to add here: the market on Phamous can only get as big as the amount of liquidity that's being provided. So, you can't over leverage or anything like that. You can only use what's on the platform available to be, used. Right. So keep in mind.
We also control the total size of the platform as well. This is another controversial thing. It shouldn't be controversial, but some people might find it controversial because they don't understand it. But we have governance keys that basically allow us to control the total size of the platform. So yeah, we'll be managing all those risks through governance keys. And I know you guys are programmed to hate all governance keys, and because you've heard them called admin keys. But we do not have the ability to come and steal your money or delete your balance or do any SBF style.
There's
secret borrowing and lending.
Liquid Loans has a partial admin key, they call it. I like governance key better because we have been conditioned by Richard. Admin key's bad. It's like, well, to a degree, but if there are really essential like valves or buttons that you need to push to prevent the whole thing from collapsing, I don't see why you'd ever want a minimum on the cap, but a maximum for sure. And this guy also Spenny. So I think we answered the question about derivatives, right? Like derivatives don't move the spot price, so there's really no whales can't manipulate the price via derivatives, really. That was the answer to that. But what is the issue with too much liquidity ending up on this platform?
You could see a situation where, say, there was a market maker whale that was providing liquidity on Phamous, and they noticed that there was a lot of leverage being taken. So, like, for instance, yesterday on testnet, there was 6-to-1 longs to shorts on testnet, right? And since I provide a lot of the liquidity, theoretically, it's not enabled yet, but in the future, at some point, you'll be able to use your PHLP to provide collateral on fiat, and then you can go borrow assets to move the spot price. Okay. Theoretically, a whale or a market maker could notice that there is over or a lot of leverage currently on one of the pools, go provide their PHLP onto fiat and borrow the asset and move the market against those positions to liquidate them, right? And they can move the spot price, and then those liquidations basically get eaten up by the PHLPs. That goes directly to the liquidity provider. So that's something you could possibly see, right?
Well, we see that all the time in the existing margin trading world. When
Basically.
there's sharks
Yep.
that get sent to that blood in the water, they use their heavy, their big weight on the spot markets to move the price in a way that would benefit them as a liquidity provider on the platform on the other side of the deal. Yeah.
Yep.
Yeah, it's totally exactly as you said, Coffee, normal. That's just par for the course. That's the way financial markets work.
Well, I like that. If there's too many shorts, then I love that. You know what I mean? There's too many longs.
But I mean, this is yeah. Sorry, I was just gonna say this is actually the feedback mechanism of how we discover price. Is all these guys get in there and they go at it, trying to basically wreck each other, right? To put it crassly, right? I'm trying to put it in words that people get, but in reality, it's people going, I think this thing's overpriced, or I think this thing's cheap, and I'm going to put my money where my mouth is, and I'm going to go along, right? And that's what that is. That's how the markets work, and that's very important for price discovery. We don't have a good price or a real price unless you have these people doing this, and that's an essential feature in all markets. So yeah, it's like if some people will go long or short and they'll get liquidated, and there's no sympathy for that. That's how the game works, and some people will win. And this is a player versus player type of market where if you're winning, it's because someone else is losing, and you should know that on the onset. And if you don't have an information advantage, if you don't know why you're there trading, you probably shouldn't be, right? You should probably leave that to the guys that know what they're doing. And the good news is you don't have you can just be a staker. If you just think the platform's going to do a lot of fees, that might be the bet you take.
That's my plan.
You get to. Yeah, I'll be.
I don't like
exactly
risk. I don't like staring at screens and all that stuff. I tried it, wasn't the best at it, wasn't the worst, but wasn't the best either. And you guys remember back in the day, like everybody used the Bitcoin indicator, the long to short ratio on BitMax was super important because you could kind of tell what was about to happen. And we're going to probably have that for PulseChain. It's going to be kind of it's going to usher in a more mature market with tools like this built right away. And can I ask, are you guys planning to launch right from the get-go, or are you going to wait some amount of time?
Yeah, so it's easier to answer that question if I know exactly when PulseChain's coming. But I'm going to answer the question with the assumption that PulseChain is minimum 3 months away. All right. So what's likely to happen, just from a sequencing thing for us, is that we're likely to launch fiat on Ethereum in Q1 of 2023, and then let's say PulseChain's coming in March as a scenario. We will, on probably day 1 or 2 of PulseChain, issue the tokens for fiat on PulseChain. We'll probably deploy fiat privately on day 2. We will probably wait some period of time. I don't know exactly. It could be 30 days. It could be 60 days. It could be longer to let that initial volatility play through. And then simultaneously, we'll probably be deploying Phamous privately as well. But we will get fiat up first, and then we will get Phamous up. But yeah, it's hard to say exactly the timing on it now with so many. Like we haven't even seen V3 PulseChain yet, right? Yeah. So you need to give me some wiggle room there. But yeah, so one of the reasons important for us to mention, the reason we're doing the sacrifice now early for Phamous is because we're looking to launch Ethereum launch fiat on Ethereum. So the sacrifice funds are going to be part of the TVL for fiat on Ethereum, and that's sort of our way of bootstrapping that. We weren't so concerned with TVL for fiat on PulseChain because we're pretty confident that we were going to have some pretty large PulseChain whales as part of that sacrifice set anyway. But we do need to get the TVL on Ethereum up to a certain size to make it viable on Ethereum. You can think of fiat as effectively a bank on the blockchain. You don't want to deposit your money at a bank that doesn't have any money, right? Like you typically go to the one that's pretty well funded. So that's why we're doing that. So this is actually a 2-for-1 sacrifice. So if you're sacrificing, you're going to get the best rate on the Fame token, but you're also going to get a little bit of the eFiat token. So that's fiat on Ethereum, but not fiat on PulseChain. So I'm sorry that's a little bit complex, but it's probably worth saying. And the details of that you can read more about at Phamous.io. But we're pretty excited because this means that we'll have the ability to go long and short HEX on Ethereum as well as on PulseChain.
Wow. Okay. So let me just unpack that really quick, guys. Wind sack phase tomorrow. Conveniently for you, Gutty, it's tomorrow. And I do plan on putting a little bit of my personal HEX in there right now. It's nice knowing that it won't be dumped on the. It's nice having a fan fiction narrative that it won't be dumped on the market. I really believe that it'll be put to good use, but that's my own personal belief. No promises or expectations. See, when you're talking about you're going to launch fiat on ETH, then you're also going to redeploy fiat on PulseChain, and those two tokens are going to be different. So the people that sacked for fiat originally, they're going to get their fiat tokens on PulseChain, but the people sacking for Phamous today are not only going to get their Phamous tokens on PulseChain, but also eFiat tokens. Did I get that right?
Yeah, you nailed it. Spot on. You did it better than I could.
Well, it's a clusterfuck of all the terminology, but yeah, that's good to know. So cool. That's pretty awesome. I mean, you guys told me that last time, but I completely forgot. It's kind of a big deal that we're going to have lending on Ethereum. And so when you're looking to raise this money, when you're looking to launch the sacrifice phase, are you primarily looking for ETH and HEX right now? So people should sacrifice ETH and HEX.
We're reasonably liberal about this. The more stable coins, ETH and HEX, the better. Anything that we're going to use in the platforms is useful, but we'll also accept things like Hedron, which we'd like to include in the platforms if possible. We'll accept just about any ERC20 token that trades well. There's a list on the website specifically of what we'll accept, but all stable coins are great. All native tokens are fine. But yeah, we just don't want $5 of some obscure coin, nor do we want 100% of the supply of a shit coin either that's got a fake valuation. Like we don't want that either.
Coin that they donated to PulseChain.
Yeah, exactly. That's what I was thinking of.
Some random wasn't Wise token. I love the fact that like millions of dollars of Wise got donated though. It's pretty hilarious.
Actually, we'll accept Wise token if you guys want to give us your Wise token. I don't think I can accept Zen because because it's hyperinflating still, and I'd rather not touch the funds during the sacrifice and rebalance. So I run the risk of the Zen going to zero like in the next 30 days. Right, like I'm like a open Zen skeptic in terms of price right now. Yeah. I get along just fine with Jack, but I think Zen's a really good short right now, personally. But I probably won't accept Zen. I probably won't accept Icosa, but I'll think about that one. But yeah, there's a few things that are sort of there's a few things like that where it's like. I don't have any issues with these things, but I just I need something that's reasonably price stable for like at least 30 days. So that's sort of what I'm thinking. But yeah, you can pretty much send us anything on in the ERC20 land, and we'll accept it within reason. But yeah, DM me on Telegram or wherever if you have something that's an edge case that you're not sure about.
Cool. And I trust that whatever ERC20s you end up receiving will be allocated appropriately to the better ERC20s that we all want to see on fiat. So this is really awesome stuff. I'm excited. Very excited to hear that you guys are launching fiat, because we get a test run before the real deal, and we get a new token that potentially has dollar value. And do you think, in your pure speculation, that there's a chance that launching fiat on Ethereum could help sustain the price of HEX during this bear market time we're going through?
There seems to be a lot of people that want to short HEX a lot, right? So
they talk a big game, but
yeah, I mean, hey, if they can put their money where their mouth is, we can probably turn them into buyers, and perhaps the market could turn around. So,
I don't like speculating on our price, but I think HEX is probably pretty close to the bottom. I'm pretty comfortable saying, both cyclically, macroeconomically, I think we're approaching the turning point. If we haven't already reached it, it's not too much further from here.
Sure does feel that way. And I guess what I'm asking is how could pump HEX in this pessimistic?
Yeah, I'm getting there. I actually think, I talked to Eric Wall a lot, and he's seeing like, holy shit, because he comes from this sort of quantitative techie background where everything he cares about is code, right? And that's not actually a good way to invest usually, right? You want to look for things that have a proper movement underneath them. Like if you were watching Apple 20 years ago, you could see just how dedicated people were to it, or even Tesla 10 years ago is another more recent example. It was, and Tim Draper who's an early Tesla investor, as well as a big Bitcoin guy. He got in because he could see it was cool. He could see this thing was going to be a trend, right? And Eric Wall, I finally got it through to his thick skull that, look at this community. That's what matters. The code doesn't matter, bro, that much. What matters is that this community is super dedicated. And then not only that, we're building, right? We're going to have our own L1, and we're going to have the same tools that you have on Ethereum, because he was calling, PulseChain a ghost town. It's like, it's not going to be a ghost town, Eric, because I'm building Aave and GMX, which are basically the two best, borrowing and lending and leverage trading platforms currently in DeFi. And the Liquid Loans guys are building liquidity. We're going to have some pretty awesome stuff of our own, and some of it doesn't even work properly on Ethereum sometimes when the fees are too high. So it's actually pretty amazing what we have coming. Indirectly, I think fiat and things like that, and all the work that people that are building stuff will actually push HEX price up a lot. But I guess directly what you're kind of saying is, yeah, there is the potential to soak up a lot of potential people selling, right? Because you can, instead of selling now, you can just deposit your collateral. So imagine you're the DO1 guy. You can just deposit your HEX, borrow a stable coin, and be happy with that, as opposed to going to Uniswap and pushing market sell, right? So this provides an extra option. And then other people that want to go long can actually then borrow stable coins and buy HEX and leverage it. So that can definitely help with price as well. These are fundamentally good things. And I want to say one more thing. If there's any whales listening, if you're holding a massive concentrated bag of something, it's logical to me to look to sacrifice to a good project that has diversifying abilities for you, both in terms of providing you a new exposure to different chains as well as to different tokens. And it's especially good to sacrifice to a project that's going to take the token that you have too much of and basically lock that token up in the TVL of the protocols that it's building for the foreseeable future. That's a very useful thing to any whales out there that are listening. So I just thought I'd point that out.
Absolutely. I second that. I mean, every time I talk to you guys, I get more and more bullish about these things. And if you are a whale, strongly consider, rather than dumping HEX, having this alternative option of a near future passive income machine, while also effectively locking your HEX in a protocol that's going to only grow the ecosystem as a whole. And I mean, this is really awesome, but I'm really bullish on PulseChain in general, just because you have to look at the people behind, what's going on, not just simply the tech. Like you brought up Eric Wall and like what he's into and stuff. Tech guys don't always make the best investors because they might have great ideas, but it's the wrong time. I think everything we're doing right now, we're exactly in the right time. We're pragmatists because we understand what people are ready for, what they actually want, and what they actually understand. And we're able to serve them the products that they are ready for. And we're not talking about this airy-fairy layer 2, crazy ZK rolls, which work and they're great, but there's no money flowing into them yet because the user experience sucks, and maybe the research has to be a little more flattened out. So timing and having your finger on the pulse of what the people want during that time is really important. And like the more I learn about people building real stuff, I just get more and more confident that PulseChain's not going anywhere. I mean, it's really just going to be the best of the best from Ethereum filtered onto PulseChain. But yeah, Godwhale, if you're listening, I know you sacked for Mintra after my video, so consider this one as a little bit better option. Just kidding, but maybe.
But thanks for that, Coffee. And just on that point, it was a year ago, actually, that I went to London, and I just like to say, on what you just said about the community. I went to London and I met you actually at the cocktail reception for the dinner that they did with Richard. I was just an anonymous nobody, and I had no fucking idea who you were because I don't really watch YouTube. But I went up to you, shook your hand, and you seemed very tired. I think you were pretty jet lagged. It was at that event that I really realized just how organized the community had gotten, and how people were building, so many different things, and I met guys like Motley and Kinetics and Richard as well, and that's a super important thing, and yeah, that's actually the real secret sauce to all this. So yeah, we can build a bigger community than Ethereum pretty easily, just by being the community that makes it easy for average Americans to use. There's a lot more people that go to Applebee's than to fancy French restaurants. So all the techie guys, that they're actually a minority of people. Yeah, there's nothing wrong with that analogy. And I mean, you look at the iPhone and the iPod originally. I know this is before your time, Dylan. But the beauty of the iPod was it was the first MP3 player that was easy to use, right? It wasn't the first MP3 player.
Yeah, I remember this.
Like it was literally, yeah.
Yeah, the little square thing with the white circle, and you press the button in the center. Yeah, I had one of those.
Yeah, exactly. So you were probably in the crib. You were probably in your crib playing with that. But that was what was beautiful.
It definitely looks like an iPhone, an iPod baby for sure.
Yeah, awesome.
Dude, yeah, it's great. And like all these real life meetups, I get so bullish after I get back. I just got back from San Diego, and It's such a fantastic time when you realize there's real people, everyone's serving their own purpose, filling their own niche. No one here is really just a waste of, 99% of people here are not a waste of space. And, everyone's got their role to play. So builders are some of the most important people, especially in a bear market. The people that are still here building, you can tell that they're legit serious about it, because a lot of people want to build a token when we're at the top of the bull market, right? A lot of people think they're going to go ahead and build the next best thing, but you get to tell who's really serious about what they actually believe in building at the bottom of the bear market. So look around, guys, and just ask yourself, do you trust this team? And it's completely up to you. Sacrifice phases tomorrow. Let's see what else about the SAC phase. I know there's a minimum. I like that there's a minimum. You don't want you don't want $5 coming in from 1,000 people when you can just have $5,000 come in from one person. What are the minimums?
I don't think there is a minimum, actually.
Oh, I thought you said there was like a minimum. Oh, maybe you meant like there's a minimum. Never mind.
Oh no, I was referring to. I prefer if you don't send me $5 of an obscure coin, but I haven't actually put in minimums. So yeah, you can put in $5 of USDC or some other coin that will then be added to a larger pool. Sort of my preference was all I meant by that. But yeah, the SAC details. There's a few things to know. The earlier you are, the better the rate you get. And by earlier, it's not really a function of time so much as the dollars in. So the details of this are on the website, Phamous.io. You can go to the sacrifice page and read the details of that. There is a volume bonus of 5% to people who sacrifice more than $100,000 worth of crypto. If you were a fiat sacrificer, you will get, you're able to sacrifice and receive an additional 5% bonus up to the amount that you sacrifice for fiat. So I say that to you because I know I think you've told me that you sacrifice for fiat as well, cryptocurrency. Yeah, so just make sure you do that from your Sang wallet because otherwise I don't know it's a repeat sacrificer. But yeah, basically this is the bottom or close to the bottom of the bear market. I think this protocol is worth $500 million on Arbitrum. The valuation that you're going to be getting at is pretty low, and it's a 2-for-1 sacrifice of two protocols that are probably worth billions in a bull market. Aave is still worth billions, even now in a bear market. So I think there is a really good potential upside here, and I really mean that. The risks around this are also important to always think about when you invest. So the risks around this are, how successful is PulseChain going to be? Are we going to be able to implement this and kind of get the lion's share of, this particular market on PulseChain? So that's a good question to ask yourself. Obviously there's always, with these DeFi protocols, there's some risk of exploits and things like that as well. So, don't bet your entire life savings on this, or anything for that matter. Be responsible, be diversified. Those are pretty important things to consider as well.
Yeah, cool. So are there going to be 2 rounds like there were for fiat, like 2 sacrifice rounds?
So we reserve the right to do, so we're calling this the early phase fame sacrifice. We reserve the right to do a second sacrifice once once PulseChain launches, if there's kind of like a lot of remaining tokens still to be allocated, but we may not do that at all. And if we do that later stage sacrifice once PulseChain's live, it's going to be at a much worse rate than the current rate, and it will be without the fiat token as well. But yeah, so that's sort of what we're doing. It'll have a sort of the sacrifice that we're doing right now tomorrow will have 2 pools. We will basically reserve the right to stop the sacrifice at any point when we're happy with what's been raised. So it's likely if we get into the second pool, we'll probably call an end to the sacrifice at that stage, sometime within that range. But if you're in pool A, you have pretty good line of sight over exactly what you're getting. You're not being diluted by the next guy the way you might with other sacrifices. That's just one of the different way we set up the mechanics, which is probably important to understand. So if we raise 50 million, let's say, or 20 million, it doesn't really matter to you, because you're not being diluted by the next marginal dollar. As a matter of fact, that person's merely paying more than you did to get in. So
it's kind of like VC sell pressure. All the SAC money is going to be allocated appropriately, so you don't have like, you just don't have people cashing out way early. And Based Clips is asking a question. He wants to know what's the valuation of the project based on sacrifice totals, but I would push back. I don't think that that's a good way to value a crypto project. I think that the valuations of crypto projects are a little bit different, and it shouldn't be based off how much was raised necessarily. So a better valuation method would just be looking at GMX or looking at Aave and just seeing how much is that coin worth, and then what are the value props of that coin, how much passive income revenue are people making from the platform fees and all that. I don't know if you think any differently, but I personally would not use sacrifice totals as a valuation method.
Correct. Yeah, I think that's probably a flawed way of looking at things, and I think you may see this. I hope I don't offend people. I feel like probably PulseX raised too much money, as an example, relative to PulseChain, right? I think the PulseChain sacrifice is more attractive because I think PulseChain as a token is going to have a lot more value than, let's say, PulseX should as a DEX. And if you just compare, Ethereum to Uniswap, and I know they're not exactly the same thing. I know there's a buy and burn and all that stuff, but it's not necessarily a good starting point to look at it that way. I would look at the total valuation. I look at the total valuation of GMX and things like Aave. Understand that their tokenomics are going to be slightly different, very different in the case of Aave, similar in the case of GMX. But those are still good handles for what's possible. And then you look at what's likely to be sacrificed. Is it low single digit millions? What's the valuation at precisely? It's probably around 10, 20 million or something like that. But that's for ETH, for the portion of ETH and the portion of Phamous, right? So it's a little bit more complicated. But the point is, it's incredibly low market cap valuation compared to many things that are out there. I like the BNB.
The best way, right? Market cap isn't even a good valuation metric. It's more like how much money can you make from this thing? Like, what are you projected? Like, you want to look at revenue, platform fees, and then your chunk of the pie, basically.
Yeah. No, I mean, that's exactly right. So kind of what I said earlier around how successful is this product going to be on PulseChain, right? So I think, to answer that question a little bit, I think it's very unlikely we have very much competition. I don't think there's too many people that can build this stuff in DeFi. And even if they tried, I don't think they're going to have the goodwill of the community the way we do. So they'd be showing up with no connections and probably with a greedier, less honest platform. And then I don't think we're going to have the same competition from, CeFi either. Because while I do imagine, PulseChain, so basically what I'm getting at is I think we're going to have almost a monopoly for the foreseeable future in both of these platforms.
And your logo as the monopoly makes sense.
That's deliberate, yes.
I get it.
Yeah.
I mean, I really like what you said about Pulse. What was that?
Right. I said there's a bit of a backstory with the logo. It's actually pretty funny. But
is Buck actually a black man? Nobody knows.
Nobody knows.
And actually, that's a good thing. I'll bring up the anonymous part next, but I really like what you said about PulseX. It's controversial, right? But yeah, raising too much money, because I think people are a little bit overly optimistic about PulseX. I don't think we see astronomical gains in PulseX until maybe 4 to 5 years down the line, when the volume really picks up on the platform, because like PulseX, GMX, and Fiat, the token values are a function of the trading activity done on the platforms. And we know that when new products launch, they don't just launch with a million bajillion users right off the bat. It takes time for users to ramp up. So PulseX buy and burn, I get it. It's attractive. It's also easy for the average Joe to understand. It's like, oh, buy and burn. Yeah, of course. But don't have, I think people are expecting a bit too much out of PulseX right away. And the real gains probably won't come in until later. Just like with Fiat token or Phamous token. I mean, I'm looking at them in the near term as passive income machines of collecting those trading fees. The actual valuation of the token, I also don't think will ramp up until a lot more people find out about it, which is, people like me. It's the content creator's job to do that. But I think when people get to use the platforms, they're going to be very, very happy with them. And so, but yeah, so you're an anonymous developer. Typically, people like to point and say that's a bad thing. I think there's a case to be made where you want to protect yourself to some degree as well. And I think that you've interacted enough with me personally and with the community in general. You've been in HEX for long enough that I know, like, and trust you. But what would you say to people that shit on anon devs?
Yeah, I get it. Like, some people want to quote Gary, look the person in the eye and shake their hand and all that stuff. And I totally understand that. But in reality, it's more nuanced than that. And just like governance keys are nuanced and leverage trading and derivatives are nuanced, right? The reality is we need to be anonymous because we need to protect ourselves professionally. And we're quite open about that. We have, very good professional careers and backgrounds. And additionally, just we don't know what the regulatory landscape of crypto looks like 5 years from now, right? They may rewrite the rules and change the rules as well. So being doxxed exposes you to all sorts of risks. So it's a double-edged sword, really. Okay, you get to see my face, right? If I'm doxxed, maybe that makes you feel better. My face isn't that impressive, but in reality, it's actually a huge risk to have the team be, have their personal information out there. They can be extorted, they can be persecuted, they can be blackmailed, they can be hacked more easily. There's a risk there, and just for us personally, it's like I'm not exactly hiding. I live in Australia. The community knows tons of information about my personal life. I've met a number of you in person before. I'd be pretty easy to find if you had to find me, right? But I'm basically hiding in plain sight in that regard, and I think that's a pretty good balance. So like Dylan doesn't technically know who I am, but he knows a whole hell of a lot about me. So that's an important thing. But if somebody wanted to get to me or the devs, for some sort of perfidious activity, to try to, I don't know, hack, contract addresses or, do terrible things, it just makes it a lot harder. And I'll add that the GMX team, by the way, is also anonymous, and it's working out pretty well for everybody involved.
Developers at all costs, right? I mean, we saw what happened with Tornado Cash Guy. That's nothing similar to what you're doing at all, but Richard Hart protects his devs with his life, basically. Like, not only is it just anytime someone bothers you guys, like, you get distracted and the product doesn't get built, the product suffers, but also, they could, if you're the one with the keys, it's you might not want to be as public as, just a pretty face like Dylan over here.
Dylan is our pretty face for the moment, but I personally have no problem doxing myself personally. It's just I'm connected to the developers, so I need to look after them, and there's children and private school fees and things like that at stake here. Like not only that, it's like crypto is controversial still. You need to be long term about this stuff and realize that there's a potential that the country you live in may not like crypto 5 years from now. So some of us may have to move, right? That's actually something that might happen, right? So we have to just it's very convenient, but ultimately you don't need to worry too much about what my face looks like. You'll be able to look at the code. You'll be able to look at the track record of everything we've done and built, and just ask yourself if it makes sense, right? And then being able to see the face is just kind of one more variable in a whole bunch of other pieces of information you should be using to assess an investment.
It's all
crypto, right?
I totally get it. Like, it does help me trust Richard by showing his face, but obviously I see the counter arguments against it too. So not really that important of a point. Just wanted to touch on that. What time does the sacrifice tomorrow go live? What time of day?
It's basically 24 hours from now, almost exactly 24 hours, 10 minutes from now.
Pretty much.
It'll be happening. So get your house in order. As I said, try to be early. You'll get the best rate that way. You have basically 2 minutes, approximately 10 Ethereum blocks to get into the best possible rate that you'll be sharing with everybody that's in those first 10 blocks. And then as it spills over like a waterfall into the subsequent tiers, proportionately. We do that. We call that the magic minutes, and there's a heavily discounted first tier called FOMO tier, which I expect will be filled up probably almost instantly. But you'll participate at least partially in that FOMO tier no matter what if you're in those first two magic minutes. So we'll do a live stream. We'll do a Twitter Spaces starting in around 22 hours from now, where we'll answer last minute questions and things like that, and we'll publish a sacrifice address 24 hours from now. It'll be for Ethereum only. That's very important. We will subsequently around 15-30 minutes later publish addresses for other L1s. But if you want to get that best possible rate, you need to do it on Ethereum, and do not send any crypto to that address on other L1s like BSC or whatever, because that will not count. So that's probably pretty important to mention as well.
Cool. Yeah, I'm probably not going to make the FOMO tier because I imagine I'm not running my own node. I mean, there's probably a bunch of smarter guys out there, but I'll be there.
You got 10 blocks, man. No worries.
Really? Is that enough for
you? Yeah, you're fine. Just 7 o'clock. Send your 7 o'clock Australian time, so it'll be 2 p.m. for you. You're in the Midwest, right? So basically, yeah, you have 2 minutes to get there, basically. So we've designed that so that it's kind of fair to everybody. It gives you enough time to safely verify the sacrifice address on Telegram and Twitter, and in the GitHub document as well. And it gives you enough time to then make a single transaction, and you'll be getting getting the same exact rate as the guy that runs the node or the guy that has super fast reflexes. Because there were a few guys that did that quite well last time. So we've tried to make this a little bit more fair to everybody who's at least trying to get to participate. So that's what we've done.
Cool. Well, cool, guys. We're at about an hour. Obviously, everybody make your own decisions. Take personal responsibility for your own actions. Don't ever just leave it up to some guy on YouTube to do your thinking for you. But do check out Phamous.io if you're interested. You can actually see what the actual DEX will look like. And looks pretty good. I mean, it reminds me of BitMEX. Purple version of BitMEX, it looks like. But yeah, so consider tomorrow, 2 p.m. CST, or not, really. I don't lose any sleep over it at the end of the day. So do you guys have any final points you want to make before we leave?
No, thank you. Everybody, we've been doing the rounds, and everybody told me that you're the best in this game, Crypto Coffee, in the community, and I think I see why. Yeah. You're pretty good. Your questions have been spot on, and I can tell that you've done your research as well before this. So yeah, I can see why they're telling me that you're the top guy in the Hex YouTube space at the moment.
Thanks, man. Yeah, and for people that can't see the nuance in my title, centralized margin trading is obviously not the same as DeFi margin trading. That's the point I was trying to make, and I'm still not telling people to ever go irresponsibly leveraged on any platform ever. So try your very hardest to understand nuanced points and that the world's not black and white. And thank you for the kind words, Buck. And that's it. We'll see you guys on the next one. Bye-bye.
Thanks for having us, man.